Welcome to another video. My name is Nick and I'm a top author on TradingView with over 260k reputation points. And here in the Transparent FX Academy, every day I share new free education and analysis. So make sure that you subscribe and I will see you on the charts. Today, I will be speaking about US oil. As usual, I will be providing a complete multi-time frame top-down technical analysis to try to understand where we have the highest probabilities for the next potential move. Now, before we start analysis, just one quick thing. We just started the Black Friday month promotion. Not only you can now join the mentorship program with a massive discount, but you also get a full refund of the mentorship program cost directly credited to your trading account because we have partnered it with a forex broker. You find all the details of this offer directly on the website linked below. So I suggest you check it out because it doesn't get any better than this. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a pretty strong impulse to the upside, followed by this correction. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse. And if we do that, we can see how the market here has just retraced exactly to the 0.618 of the Fibonacci taken on this monthly impulse, which is a quite strong level of a monthly support and demand that we did expect the market to test and then reject to the upside. And in fact, that is exactly what the market did. We can also see how this 0.618 was lining up perfectly with this previous monthly resistance here, again resistance here, and again resistance here, which the market obviously broke to the upside, went and retested, and has now started rejecting to the upside. So here in the monthly, everything seems extremely bullish for US oil. We can also see a new higher high. So in a situation like this, after the market has actually completed an impulse correction, you expect the market to provide another correction before the continuation to the upside. So we can expect short-term bearish price action before then longer-term continuation to the upside. Now, if you remember, I made a full breakdown of US oil when the market was around this area, explaining all the reasons for which we expected this market to provide a move to the upside. And by the way, I will link this previous analysis in the description, so you can go and check it out for more free education. Now, dropping down on the weekly time frame, what do we have? Now, here on the weekly, we can see how the market has just printed this overextended W formation. Now, in general, after the creation of an overextended W, you want to see the market provide a correction at least to the 0.32 of the Fibonacci taken on the daily impulse. So in this case, if we take our Fibonacci from the low to the high of this impulse, we expect the market to provide a correction at least to this 0.32 of the Fibonacci taken on this weekly impulse. We can also notice how the market has just printed this candle here, so a candle with a red body and a very long wick. And usually when you see a candle like this with a very long wick and a red body, you expect the next candles to fill in the wick before then printing more continuation to the upside. Just a quick thing, make sure that you like the video, subscribe, and let me know in the comments any suggestions for new videos. Dropping down on the daily time frame, what do we have? Now, here in the daily time frame, what we can see is that we have broken structure to the downside. I also made a breakdown of US oil after the market printed this M pattern, explaining all the reasons for which from here we wanted to see the market provide this move to the upside and complete the pattern at this previous support and resistance. And in fact, that is exactly what the market just did. And by the way, I will link also this previous analysis in the description, so you can go and check it out for a more free education as well. Now, as we're testing this previous resistance, turn support here, which is now again resistance, we can expect the market from here to provide a rejection to the downside, which is what we had already identified by checking the monthly and weekly timeframes. Now, also here in the daily, since we have an impulse and correction, we can measure this correction by taking our Fibonacci from the high to the low of the impulse. And if we do that, we can see how at the moment we're testing the confluence of the previous support and resistance and 0.618 of the Fib taken on this daily impulse, which is a quite strong level of daily confluence of resistance and basically cluster of resistance that we do expect this market to reject to the downside. Now, since we have this potential short-term shorting opportunity, how we will be approaching it with students. Now, as usual, we will be reactive and not predictive. The monthly, weekly, and daily, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4-hour and lower. Therefore, with students inside of here, we will be monitoring price action from an intraday perspective, waiting for the market to shift from an intraday bullish market as we have right now to an intraday bearish market. And only if the market will shift from an intraday bullish to an intraday bearish market, only at that point we will be adding USOIL to our watch list. And as soon as the market will provide to us one of our valid entries, we will be looking for a potential short with a good risk to reward and good probabilities at that point for the move to the downside and for the market to complete this impulse correction and impulse pattern to the downside, and for the market to provide and create a potential lower low. If you enjoyed the video, make sure that you smash that like and comment below. It really does support the creation of more free education analysis for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you get a new daily market breakdown every day showing you how to apply the strategies in actual real market. And you also get your questions answered every single day in the daily Q&A session. So it's a very complete program. I suggest that you go and check it out. The link is in the description, and I will see you in it.